Hey everybody, Stephen Weitzel, Managing Partner at Reveille Wealth Management. Hope everybody's having a great summer. Today is Friday, June the 16th, and we're at the end of a week where the Federal Reserve had a meeting where they've decided for the first time since March of 2022 not to raise interest rates. And so investors are wanting to know, what does this mean for them? What should they be doing differently with their money now than before? And so a lot of the commentary that's been floating around out there from the big Wall Street banks and the strategists, they are terming this as not just a pause in this rate hiking path that the Federal Reserve has been on, but they're terming it a hawkish pause. So just a quick commentary here, or definition about what does it mean to be a hawk. The antithesis to that would be a dove. So someone that is hawkish, or a more hawkish monetary policy stance, is one that's more determined to root out inflation and would really be looking to raise rates more aggressively in order to accomplish that goal of curtailing inflation and bringing it back down, where a more dovish policy would be one that's going to have more easy monetary policy, willing to allow inflation to run maybe a little above trend. And so I find it ironic that this first pause that they've had in this rate hiking path that they've been on over the last 15 months, that the Wall Street consensus is that this is not just a pause, but a hawkish pause, where often last year, as the Fed was raising rates, we would get commentary from them that would refer to these hikes as dovish hikes. And so I feel like the commentary that's being put out is not something that investors are readily able to understand what they should be doing and what the implications are for their investments. And so in an effort to overcome the fogging of the message that a lot of the Wall Street analysts are putting out, our focus here at Reveille is to simply discern and align with market trends. And so we want to look at a chart here of the U.S. corporate bond index. And so as we pull that up, we notice that throughout 2022, despite the fact that we would have had rate increases, and whether they were considered to be dovish or hawkish or anywhere in between, this was an environment where bond prices were declining. And this was an environment where we did not want to have exposure to most areas of the bond market. But really, since the end of last year, we noticed that downtrend in bonds seems to have exhausted, and that a new uptrend has been present. And so we've wanted to be invested in the bond market since late last year and earlier this year. And so now, with this announcement that we have out of the Federal Reserve, we don't need to spend any time or energy trying to decipher whether or not this was a hawkish pause, a dovish pause. We can simply acknowledge the fact that the Federal Reserve has paused, and what we see is that bond prices are remaining in an uptrend. And this is an area of the market that we think that investors need to have exposure to at this point in time. If you would like to learn more about our rules-based investment discipline and how it helps us to make confident investment decisions and not have to focus so much on understanding why the market is doing what it's doing, then please reach out. Send us an email to info@reveillewealth.com or give us a call. We look forward to having an opportunity to speak with you. Everybody enjoy your summer, and we will talk to you soon. Thanks so much.